The charts are screaming a warning, and the on-chain data is flashing red. A staggering 6,894% spike in Shiba Inu exchange inflows has just been recorded, a massive signal that extreme volatility is not just coming, it is imminent. This is the moment where fortunes are made or lost. But what am I even talking about? Well, let's break down this colossal on-chain spike and what it means for the price action in the next 48 hours. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The exchange inflow metric is one of the most critical on-chain indicators for predicting short-term price volatility. It measures the amount of a cryptocurrency being moved from non-exchange wallets, like cold storage or personal wallets, onto centralized exchanges. A massive spike, such as the 6,894% surge recently recorded for Shiba Inu, is a powerful signal that a large volume of tokens is being positioned for potential sale. This script will dissect this monumental on-chain event, which is the biggest spike in months, and analyze why it is a direct precursor to extreme price volatility. The core thesis is that this sudden influx of supply onto exchanges significantly increases the sell-side pressure, creating a high-risk environment where a sharp price drop is possible, but also setting the stage for a massive rebound if the supply is absorbed by buyers. The sheer magnitude of the spike suggests that a major market player, or a coordinated group of players, is preparing for a significant move, making this a high-stakes moment for every Shiba Inu holder. Understanding the mechanics of this inflow is key to navigating the turbulent waters ahead. The main event is the colossal, multi-thousand% spike in the 7-day mean exchange inflow metric for Shiba Inu. This metric surged by an astonishing 6,894%, marking one of the biggest on-chain spikes recorded in months. This dramatic increase signifies that a massive volume of Shiba Inu tokens has been transferred from private wallets onto centralized exchanges. Generally speaking, a huge increase in inflow indicates that tokens are being moved to exchanges with the intent to sell, as tokens must be on an exchange to be traded quickly. This event is a direct counterpoint to the recent whale withdrawal of 169 billion Shib from Coinbase, suggesting a battle between long-term holders and short-term profit takers. The spike is not just a statistical anomaly, it is a clear, unambiguous signal of an impending supply increase on the market, which historically leads to heightened volatility and often a downward price correction. The market is now flooded with potential sell orders, and the next few hours will determine if the current buying demand is strong enough to absorb this colossal influx. The market's reaction to this massive inflow is one of immediate caution, as the increased supply is already exerting downward pressure on the price. Shiba Inu is currently trading at 848 units, reflecting a struggle to maintain recent support levels. The 24-hour trading volume stands at $133 million, and the market capitalization is over $4.9 billion. The price is currently sitting near a critical support level, and the massive inflow suggests that this support is about to be severely tested. The price action is characterized by a lack of sustained momentum, with the recent volume surge being rejected at key moving averages. The 6,894% inflow spike is a fundamental shift in the supply-demand balance, where the supply side has suddenly gained a massive advantage. This is why analysts are predicting extreme volatility. The market must either absorb this supply with an equally massive surge in buying, or the price will be forced to drop sharply to find a new equilibrium where buyers are willing to step in. The technical evidence is now aligned with the on-chain data, painting a picture of extreme short-term risk. The 6,894% exchange inflow spike is the primary on-chain indicator of this risk. This metric is a leading indicator of sell-side pressure. The total exchange-held Shib has been elevated, with reports suggesting a sizable movement in the context of the token's total circulating supply. This increased supply on exchanges is the fuel for the imminent volatility. Technically, Shiba Inu is already showing signs of weakness, having recently been hit with its first death cross in December. A death cross, where the 50-day moving average crosses below the 200-day moving average, is a classic long-term bearish signal. While the price is holding the key 20-day simple moving average support, the massive inflow threatens to break this support. The combination of a long-term bearish technical signal, death cross, and a short-term bearish on-chain signal, inflow spike, creates a high probability scenario for a sharp volatile move to the downside. The market is now in a precarious position, where the slightest negative news could trigger a cascade of sell orders from the newly deposited tokens. The implication of the 6,894% exchange inflow spike is that extreme volatility is imminent, and the short-term risk is heavily skewed toward a sharp price correction. This massive influx of tokens onto exchanges suggests that a major market participant, or a coordinated group, is preparing to liquidate a significant portion of their holdings. This is not a signal of accumulation, it is a signal of distribution. The analysis suggests that this move is a strategic attempt to take profits after the recent minor rebound, using the exchange as the venue for the sale. The most critical implication is the potential for a liquidity crisis on the buy side. If the selling pressure from this massive inflow overwhelms the current buying demand, the price could drop dramatically in a very short period. The market must now find an equivalent amount of buying power to absorb this supply, or the price will be forced lower to attract new buyers. This event fundamentally changes the short-term market dynamic from a period of consolidation to a period of high-stakes, high-volatility trading. The Shiba Inu community, the Shib army, is reacting to the inflow spike with a mixture of concern and defiance. While the on-chain data is clearly bearish in the short term, the community is focusing on the fundamental positives, such as the soaring burn rate, which has seen a massive spike of over 1,800% in the last 24 hours, incinerating over 35 million SHIB. This fundamental positive is being used by community members to argue that the supply will eventually be absorbed. However, the developers have remained largely silent on this specific on-chain event, focusing instead on the long-term utility of Shibarium. The community sentiment is divided. The technical traders are bracing for a volatile drop, while the long-term holders are viewing this as a temporary shakeout before the next major move. The key is that the community is now on high alert, recognizing that the market is at a critical inflection point where a major price move is inevitable. The short-term forecast, 1 week, 1 month, is dominated by the threat of a sharp price correction driven by the massive exchange inflow. Analysts suggest that the most critical level to watch is the immediate support at 800 units. A break below this level, coupled with sustained high volume, would confirm the seller's dominance and likely lead to a drop to the next major support at 750 units. The long-term forecast, 3 months, 3 years, remains uncertain, as the current price action is failing to confirm a long-term trend reversal. The risk of a deeper correction remains high, with the potential for the price to erase all recent gains. The key indicator to monitor is the exchange net flow data. A sustained period of positive net flows, more tokens leaving than entering exchanges, would be the only signal to invalidate the short-term bearish outlook. Until then, the market is on high alert for a volatile move to the downside. A balanced opinion must conclude that the 6,894% exchange inflow spike is a massive high-risk signal that extreme volatility is imminent. While the long-term fundamentals of Shiba Inu, such as the burn rate and Shibarium development, remain positive, the short-term technical and on-chain data is overwhelmingly bearish. The primary risk is the sudden increase in sell-side liquidity, which could trigger a cascade of sell orders. Investors should exercise extreme caution and consider reducing their exposure until the market absorbs this massive supply. The only way to invalidate this bearish signal is a massive high-volume buying spree that absorbs the newly deposited tokens without a significant price drop. Until then, the high short-term risk of a sharp correction back to the 750 unit support or lower remains the dominant factor in the market. The charts are screaming a warning, and the 6,894% exchange inflow spike is the clearest signal yet that extreme volatility is imminent. We've seen the on-chain data, the bearish technical signals, and the massive increase in sell-side liquidity. The stage is set for a major price move. Keep your eyes on the 800-unit support. The next few hours will determine if the buyers can absorb this colossal supply, or if the market will force Shiba Inu into a sharp, volatile correction. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.